I'm Lucas, and welcome to our week in review. Let me start with the numbers, because this was a hard week. Alpha Wizard fell 6.1%. For comparison, the S&P 500 slipped 1.5%, and the Nasdaq 100 fell 4.2%. Year to date, we are still up 11.6%, ahead of the S&P 500 at 9%. Our largest drawdown this year sits at 17.7%, against 9.1% for the S&P 500. The Sortino ratio, our measure of return against downside risk since we began, reads 1.0. Here is the year-to-date picture, our strategy against the S&P 500 since January the 1st, with this week in the shaded band. You can see a strong lead built through the spring, then this week's sharp step down inside the band.
Thanks, Lucas. I'm Ronnie, and I look after our trading operations. Let me set the scene for the whole market first. Stocks fell across the board this week, and technology led the way down. So, where does that leave our risk overlay? Every night, the system recalculates more than 20 risk indicators across markets and sets our equity exposure for the next day. Right now, that dial sits near 49% invested, with the rest held in cash. That puts us in cruising mode, a middle stance, neither fully accelerating nor hard on the brakes. As the chart shows, exposure held steady close to 49% every day this week. The overlay does not try to predict the next move. It is built to limit how hard a broad market fall can hit the whole book.
Back to me. So where did the damage come from? On the positive side, Nucor rose 4.1%, and Monster Beverage edged up 0.1%. Centene slipped 1.4%, but held up better than most. The Laggards tell the real story. SanDisk, a maker of flash memory storage chips, dropped 29.3%. Sienna, which builds optical gear that carries internet traffic, fell 18.7%. Seagate, a maker of hard disk storage drives, lost 13.5%. On the right, you can see how our holdings did against their sector benchmarks. Our technology names fell 14.4%, well behind the tech sector's 5.5% decline. Our industrial and financial holdings did better than theirs. One number needs context. Those are gross stock moves. But the risk overlay kept us only about 49% invested, so the cash side cushioned much of the blow. That is the know when to break half of the job.
Our spotlight this week is Nucor, and I'll take it. Nucor is the largest steel producer in the United States. It melts recycled scrap metal into new steel. This week, it was one of only 3 names in the green, up 4.1%, while our technology holdings sold off. Here is Nucor's share price over the past 6 months. The trend rises steadily, up about 35.6% over that stretch. We hold Nucor at equal weight, the same as every other position, one of 21 names, each a roughly equal slice. It earned its place on our systematic screen for steady profits and cash flow, not on a gut call. A steelmaker also gives the book a little balance away from technology. Staying with me, here is the week ahead. 2 of our holdings report earnings. Vicor, a maker of power conversion components, reports before the market opens on Monday, the 21st. Intel reports after the close on Thursday, the 23rd. On the economic side, the weekly jobless claims figure lands on Thursday as well. It is a lighter calendar than some weeks. Still, earnings from a chip name like Intel can move sentiment across the sector. These dates are estimates, so please confirm them before you act.
Lucas here to close. A tough week does not change the process. We stay data-driven, not gut-driven, and let the systematic rules decide. If you would like to follow along, you can copy Alpha Wizard on eToro, where our trades mirror into your own account, which you control at all times. Our reviews live in the cockpit at veloriscapital.com, and the Pit Lane Briefing is our weekly newsletter. Past performance is not an indication of future results. Your capital is at risk. Thanks for watching.